In this video, we're going to decode the big beautiful bill for real estate, everything you need to know, both you, the investor, and your advisor. So one of the big tax benefits of the big beautiful bill was the increase in the federal estate tax deduction. It is now at 15 million per person. So for a married couple, that's 30 million. Now, I don't need to tell you, obviously, anyone who was between the previous deduction and now they have a ceiling of 30 million, you now can do aggressive estate planning knowing that you can shelter your entire estate for your kids through good estate planning from any federal tax, along with any capital gains and depreciation, by leveraging the step up in cost basis which they left in place. So it's very important, if you have real estate, a lot of real estate, a lot of highly appreciated real estate, that working with your estate planner you can really get some good benefits. A couple of other things that we saw from the big beautiful bill was the bonus depreciation got pushed back up to 100%. Now, this is a great tool to be used by real estate investors on a bunch of fronts. One of the big things we see in the 1031 exchange market is sometimes people have partial 1031 exchanges and or a failed 1031 exchange. And what that really means is I went to sell my highly appreciated asset using a 1031 exchange, but I didn't complete purchasing the replacement property. So as an example, if I was selling something for $1 million and had a zero cost basis, and now if I'm in a blue state, I could be possibly facing a 40% tax, that is $400,000. And I haven't met an investor who willingly wants to pay $400,000 to the IRS. So in lieu of that, that investor can literally buy their way out of their tax. And what I mean by that is by leveraging bonus depreciation. And you say, what's bonus depreciation? Well, that's where you can take accelerated depreciation in the first year. And there's certain categories of investments that allow a 100% deduction of that asset. Now, we're seeing it right now in the real estate market, an increase in demand for car washes, gas stations, convenience stores. These type of businesses in real estate provide a great venue to take the 100% bonus depreciation. So, going back to my example, if I have a $400,000 tax bill, I can take that $400,000, and we in the industry have bonus depreciation investment funds. We have one right now that invests in gas stations, okay? And due to the tax code, if 50% or greater of your revenue from your business is involved in fuel sales, you can take 100% bonus depreciation. So now that same investor, these funds are leveraged, they take their 400,000 and basically generate a bonus depreciation to offset almost all, if not all, the capital gains and depreciation from their failed 1031 exchange. So bonus depreciation has become a great tool, and it can also be used in lieu of a 1031 exchange. So let's say you're selling something for $3 million, but you only have $1 million of capital gains. So going back to that same example, we got a $400,000 tax. Well, instead of deferring all the money into new real estate, let's say you want to diversify, you're real estate rich, but stock poor, right? You can now forego the 1031 exchange, do the bonus depreciation with the $400,000 or $500,000, and then take the balance of your funds, $2.5 million, and diversify out of real estate. So great opportunities. And the other good benefit of the big beautiful bill is they left the section 1031 of the tax code for real estate deferrals unchanged. So if you like this video, hit like and subscribe. and check out my other videos.